Hi, this is Dylan. Welcome to my daily trading analysis video. Today is a Monday, 12th of January. Alright, so we're going to start off with the euro against the US dollar. Alright, as you can see that there is a falling trend channel. Price has already broken below it and it has formed another minor falling trend channel itself. So price has definitely touches the bottom of the channel before, came even lower, got supported at the price of 1.1761. And it starts to retrace, moving closer and almost touching the top of the minor falling trend channel. So zooming the 1 hourly chart, we are waiting for price to touch the top of the minor falling trend channel to wait for the short opportunity. But however, if price were to break above, based on Fibonacci expansion, we measured that the retracement can go up to the price of 1.1938. So there's a next level to look for a short opportunity, and if not, we are waiting. If it breaks above, then we are also waiting for price to touch the bottom of the previous falling trend channel itself. Alright, so these are the first three levels that we're going to look at to for a short opportunity, because there might be a major retracement that's coming along the way. Due to a falling average hourly wages for the US, which may dampen the bets for an early interest rate hike, and therefore the dollar might weaken for this period of time. Of course, at the same time, we also look at the euro itself, the European Central Bank looking at expanding their balance sheet, or to put it in other words, to apply the quantitative easing. So that's for the euro against the US dollar. Before I forget, if it falls further, first support level, we are looking at the previous low at 1.7612. Sorry, 1.1761, and we are further down will be the 1.1579, the final exhaustion level for the whole trend itself. All right, next we have the New Zealand dollar against the US dollar. Price has touches the top of a falling trend channel. Right, so we can see that price has been resisted and closed right below the top of the falling trend channel. So we're waiting for a setup to go for a short opportunity. Of course, at this point of time, you can zoom in to the 1 hourly chart to see if there's a possible chance or a straight setup to go for a short. If not, you can also wait for price to hit the previous high for this retracement itself, and to decide if you want to go for the short at this moment. However, if based on the Fibonacci expansion measured from the bottom to the top over here, we are seeing that the final exhaustion level for this retracement itself is at the price of 0.7925, the blue horizontal line over here itself. So if price were to break above, then the next level we are looking at is over here, 0.7925, followed by the previous high over here at 0.7970. Right, so these are the three levels that we are looking for. If price were to get go resisted and starts falling, we are waiting for price to hit first level at 0.7693. Finally, the previous low or the final exhaustion level at the price of 0.7608. Alright, next we have the pound against the US dollar. Alright, now that the price has touches the bottom, the previous low at the price of 1.5057, which is also the final exhaustion level for this trend itself, and we might be expecting a bigger retracement over here, because based on the fundamental is that the average hourly warning has dropped unexpectedly, which has dampens the bets for a earlier interest rate hike by the Federal Reserve, and therefore it gave the chance for the Bank of England to catch up in terms of raising interest rate earlier. So pound might appreciate further against the US dollar this week, and therefore there might be a possibility for us to go for a long to trade the major retracement itself. Alright, and on the technical side is that price has fallen back into the major falling trend channel. So first level we are looking for, in fact we can plot a Fibonacci retracement, right, from the top here to the bottom. Personally, I'm looking at the retracement level of 61.8%, and if not all the way to the top of the falling trend channel, and right before it would be the 200 moving average. So these are the few key resistance level I'm looking for. If price were to fall, of course we'll be looking at the previous low at the price of 1.5057 and all the way to 1.4825 support level based on the weekly charts over here. Alright, so that is for the pound against US dollar. Next, we have the Aussie dollar against the US dollar. So then again, price has also break into and back to the falling trend channel. Currently, it's about to hit the 200 moving average based on past record. Price usually break above the 200 moving average a little bit before it starts to fall again. So right now we are still expecting price to appreciate a little bit further. We can in fact plot a Fibonacci retracement. So over here we can see that the retracement level the retracement level of 30.2% could be the key resistance level over here. And if price were to appreciate even further all the way to the top of the previous falling trend channel, then we are looking at the retracement level of 50% at the price of 0.8412. So these are the two key levels that we are looking at. And on the downside, the first support level is back to the bottom of the previous falling trend channel, followed by previous low at price of 0.8031, and finally the next exhaustion level at the price of 0.7929. So that's for the Aussie against the US dollar. Next, we have the dollar against the Japanese yen. Price has broken below the 200 moving average, at the same time breaking below the bottom of the symmetrical triangle. Therefore, we are expecting price to fall a little further. And recently, oil prices has plunged again. That could have boost demand for a safe haven assets which might help to strengthen the Japanese yen. And for the US dollar, as I have mentioned, there was a dampening in the bets for earlier interest rate hike, so that could have weakened the US dollar by a bit, and therefore dollar yen might depreciate a little bit furthermore. First support level at 117.71, and it is possible for the price to go even lower all the way back to the previous low at the price of 115.53. Fibonacci expansion level of 161.8% and retracement level of 61.8% based on the daily chart itself. Right, and that's for the dollar against Japanese yen. Finally, we have the dollar against Swiss franc. We're seeing that price has been retracing, falling and retracing at the moment itself. If you plot a rising trend line over here, price is about to touch, or rather has touched the rising trend line. So if price were to see support over here, then we can look for a long opportunity. But however, price may be expected to break below and fall even further, or rather to retrace further at this moment itself. So so first level will be right now, followed by the top of the previous falling rising trend channel. Alright, so these are the two key levels for now, and of course on the upside we are looking at the final exhaustion level, the price of 1.0302. Alright, so that's all for today, and just to take note that at this period of time we are expecting a huge retracement, since there's a dampening in the bets of a earlier interest rate for the Federal Reserve. Right, and probably I would like to touch on a few other currency pair. First, we have the euro against the Australian dollar. This is the daily chart. We have seen that the price has broke below the a rising trend line over here. Expected price to fall even further. Zooming into the 4-hourly chart, there's a minor falling trend channel that's forming, and right now price is at the bottom of the minor falling trend channel. and therefore we might be expecting a little bit of retracement over here. So if price were to retrace, look for an opportunity to go for the shorts. All right. And of course, we have the Aussie against the Japanese yen. Price is about to touch the top of the previous falling trend channel. Also, we have 200 moving average as additional resistance level. If price were to spike, we will expect price to retrace or pull back at the retracement level of 30.2%, price of 90.11. All right, and yep, that's for today. And thank you for watching, and I'll see you again.